Creamer Media's Mining Weekly is speaking to Niël Pretorius, the CEO of DRDGOLD, which celebrates 130th anniversary of being listed on the Johannesburg Stock Exchange. Niël, it's great to chat to you on this day. I'd like to kick off by just saying, what do you see as the main highlights of this 130 years, and how does it benefit you now to have this 130 years behind you?
I think the highlight for me is the fact that we're still around, and not just around, but that we're probably now as stable as ever. The work that the team's done over the last few years, setting up a second project, capitalizing both projects to extend life of mine, setting up the business in such a way that it can survive through the lean times, which is done several times, but then also take advantage of the good times, and we're now in an exceptionally high gold price. It's an absolute privilege. So it's wonderful to be around. 15 years ago, when we started on this journey of moving away from deep level underground mining and focusing more and more on the surface retreatment, and we've been an exclusively surface retreatment company since 2012. When we started out on this journey, there were 10 relatively small gold mining companies in South Africa, and I think if you had compiled the list of those companies at the time of who were the most likely to succeed and who were the most likely to fail, we would have been top of the list in a wrong way on both those lists. I don't think there was a lot of confidence in the future of DRDGOLD, but the team pulled through, and they built on the legacy of those who came before us, of not giving up, that resilience that I think carried the old Durban Road deep through so many different phases, so many different things in its lifespan. It was hardly established, and there was an armed conflict in South Africa with the first Anglo-Boer War, and then there was the second Anglo-Boer War, and then there was the rebellion in the First World War. There was the flu of the 1990s, 1922 strikes, the depression, the urbanization of the Afrikaner after the Rinderpest and the drought, coupled with the depression, the Second World War, Afrikaner nationalism, democracy, COVID. Came through all of those things, and to still be around and to be in this position today is an absolute blessing, and that definitely is the highlight. So that's in the DNA of the company, to deal with these things and to set the company up in such a way that it can navigate those things, and it has. So we're very blessed, we're very privileged to be here.
And it's happening at a time of a record gold price. Firstly, I'd like to find out what sort of latitude this gives DRDGOLD to have this sort of gold price at the moment.
Well, remember, Ergo would have closed down 3 years ago. The initial ore body that Ergo was premised on, the capital investment was premised on, that ore body was getting to the end of its life 2-3 years ago, and we really should have gone into the decommissioning of that business. And with the gold price having started to change for the better even then, it became apparent that it was premature to do that. So Ergo is now basically reinventing itself. It's setting up infrastructure and establishing a network of access into resources that sets it up for another 15 odd years, maybe even a little bit longer. We're just looking at our own resources. It's already built the solar farm, Far West Recoveries, which was the asset that we acquired from Sibanye-Stillwater, and that, as a consequence of which became a member of the Sibanye-Stillwater group. That's making the transition from a boutique company or a boutique operation to a mega operation. It's going to go from 500,000 tons to initially 1.2 million tons, and then further down the line to 1.8 million tons per month. So that is a mega operation in the truest sense of the word, and that also requires a lot of capex. So what this is doing for us is really, it's helping us to not have to dip into the finance facilities that we've established to fund this expansion. Still have a little bit of cash left after investing into infrastructure, and we're really pushing hard to get this done as soon as possible, because the gold price could turn eventually, that margin will become eroded, and by then we want to have this all set up. So it's definitely helping us to set DRD up for the next phase. I'm hoping that in 20 years from now somebody else will be standing here and celebrating the 150th anniversary of DRD, and certainly the infrastructure that's been built now, especially at Far West. Yeah, that tailings dam that we're building there has a capacity that is 4 times bigger than our remaining resource. It can accommodate all of the tailings in that area. So that operation could be there for many, many years, and it could take all of those tailings that were built on those dolomites and reprocess them and put them onto that tailings dam. and provide a permanent environmental solution as well, while generating value and generating wealth for both the company, its shareholders, and its stakeholders.
And Niël, at this time, there's also a South Africa, which is bigger than DRD Gold. There's a South Africa which has a gold reputation. There's a South Africa that has remnants around the place. What can we do to really capitalize on this great gold price? I mean, it looks like it could be stronger for longer, and hopefully we could revive something here just to make good fortune during this period. As a South African, what do you see in the bigger picture?
Yeah, Martin, so many mines close prematurely. I consider one of the single biggest objectives, if you're involved in gold mining, is to prevent premature closure of an operation, to fully optimize that resource, especially in deep level underground mining, because once you pull out, it's very hard to go back in again. These mines fill up with water, etc., etc. Infrastructure gets dismantled, etc. So it's very expensive and close near to impossible to go back into mines. So I'm hoping that what this windfall, which, as you say, hopefully will be around for a little bit longer, because I think the fundamentals are very much in support of a higher gold price for a much longer period of time. I'm hoping that some of that will find its way back into the recapitalization of these operations and the further extension of the life of these operations. We simply can no longer allow mines to close prematurely. It's so much value that gets lost. And ultimately, it just ends up being the place where we have these massive social challenges of illegal mining of zamazamas. The fact that there are thousands upon thousands of zamazamas mining closed and discarded mines tells you that there's still a lot of gold left. These mines closed too soon. And they closed too soon because it no longer made economic sense to continue capitalizing them. So hopefully we'll see an extension of those companies that are still involved, the Sibanyas, Goldfields, Harmonies, and so forth, that they will also take advantage to further bolster their operations and create and establish embedded resilience to take these assets further into the future and make sure at least that this generation fully optimizes the potential of its ore bodies. I left out Pan. I mean, obviously Pan is also, it's putting its money where its mouth. It's also capitalizing aggressively here in South Africa to optimize its asset base. So the five of us, we really should be focusing on that.
And then just looking at the opportunity on surface, is there still a long way to go beyond what you're doing at Ergo and far west? Is there more to do, and should it be done now?
Yeah, absolutely. Look, you can only mine at a particular rate. Your throughput rate's determined by the amount of material that you can put onto your tailings disposal facility. So once RTSF is up and running, it will be able to do between 1.8 and 2.4 million tons per month. So the period of time over which you will be processing tailings will be determined by that rate, which basically means if you look at that entire footprint, that once we've mined through our entire remaining resource of about 200 million tons, that there'll be plenty of space and other resources that by then not been mined by mines in the area could then find its way also onto that tailings dam. So there's no reason why that shouldn't be reprocessed and also find its way onto that tailings dam. And the same applies to the East Rand. Now, Charles Simmons, my colleague, who's retired now but who attended this event, he used to say there's going to come a time when these crown tailings next to Nasrec, when they will become viable to remine at the current gold price. That viability threshold has been breached. We're right there now. So those could find its way onto through the reprocessing circuit as well. So there's plenty of opportunity that we can exploit going forward. And you know what, the simple reality is that if you compared just the ratio, gold in proportion to issued currency 20 years ago and before 2008, since the collapse, what's happened since the big fiscal collapse, and the amount of currency that's been pushed into markets, that's been created for no reason other than somebody said, let there be money, and money found its way into the markets. The amount of gold in proportion to the amount of issued fiat currency, that relationship is far healthier from a gold perspective than from a fiat currency perspective now compared to 20 years ago. So even if there is a measure of recovery in the international markets, and we move out of this period of uncertainty, which seems to be coming from every conceivable direction now, that doesn't change. You still have these mountains of cheap fake money that's been created to sort of create the illusion that economies are not shrinking. relative to the amount of gold that's finding its way into the market. That hasn't changed. So I think one of the other gold executives used the term gold is rebased. And I think certainly in terms of that and that relationship alone, there's a good case to argue that it's certainly rebased. There's just too many dollars out there relative to the amount of gold units that's out there. So hopefully this will further support the gold industry going forward, provided we manage our costs and we keep inflation under control. Arnold von Graan was saying to me, now's the time not to get fancy. Now's the time to stay honest, to stay modest, and stay true to your principles. So we'll try and steer that course.
And finally, Niël, just getting back to Crown, I'm thinking of Crown. What could that do to South Africa's, and Soweto particularly? How would that affect people traveling into work if we actually got the gold off that and restored the area and people could live closer to Joburg? Is that a possibility?
Oh, absolutely. There's no reason why it shouldn't, because the 3 tailings dams that are there, the tailing storage facilities that are there, that could potentially now be mined over time. And it'll be done by the next generation of management, but it could be done nonetheless. Once those dams have been removed, you've cleared more than 500 hectares of prime land, which incidentally belongs to DRD. It's registered in our name. And that could be developed, and that could just change the dynamics of the commute by so much. Instead of taking taxis and all sorts of other non-existent public transport from Soweto into Sandton, you walk across the road and you're right there. It could become a real, I think our president spoke about a smart city many years ago. That could be the place where one could build one of those cities, a world-class commercial hub for real economic activity. That space will be available for that.
That was Creamer Media's Mining Weekly, speaking to Niël Pretorius, the CEO of DRD Gold, which celebrates being on the Johannesburg Stock Exchange for 130 years.